Hello, everyone. This is Nagaraj Annaiah, your trusted Bay Area Realtor. Welcome back to the Real Deal, where we talk all things real estate and lending. In today's episode, we are diving into hot topic. Will mortgage rates finally drop? Or is the new normal? Today, I'm joined by April Held, the mortgage expert who's helped a lot of my clients and a lot of people around in the Bay Area. Hello, April. Welcome back to the show.
Thank you, Nagaraj.
Listeners, if you have any questions, this is a show you should not hesitate. We are here to build your wealth, build your dream, build your all the things related to real estate. If you have any questions, do give us a call. Our studio line numbers are 877 Bolly 92, 877 265 5992. Any questions on the Bay Area real estate? Don't worry, give us a call. We are here to build your wealth, build your real estate, build your complete anything on the real estate related. If you don't ask questions, April, you can't build your wealth, can't build your real estate. You should always be asking questions, right? Hello, April.
Absolutely.
So let's start with how does the race look right now? That's very, very important for the lot of listeners out there.
Yeah, rates actually are still doing really well. The ARM rates are in the high fives, so 5.75% for a 3-year ARM, 5-year ARM is 5.875, and even the 30-year fixed is running right around 6.625% today.
Yeah, I think the rates still are under 6%, right? A lot of listeners think like the rates are too high, I think, but it looks not so bad.
That's correct. Yeah. And those are 0 point rates. So, there's always buy downs on some of the rates as well, if it makes sense for a buy down.
Mhm.
But those are, historically speaking, still very good interest rates.
But will mortgage rates significantly drop in 2025? What are we going forward? We can think about a lot of people might be still waiting. The rates might drop, rates might drop. What do you think about that?
They're kind of saying right now that interest rates are going to stay pretty steady at about what they are right now till the end of the year. We were hoping maybe for a little bit of a drop, but
Mhm.
probably going to stay probably pretty close to the same. If it makes sense to refi now, if somebody had a higher interest rate, I would absolutely take advantage of it now because later on, if rates drop again, you can refinance again. But it definitely rates have come down from a couple years ago.
Mhm.
So if it does make sense, I would definitely suggest that people take advantage of it and take advantage later if it happens again.
So refinance, let's talk about the refinance rates. Like how are the refinance rates looks?
Those are exactly the same with us. So sometimes with certain lenders, they do have different rates for refinance and different rates for cash out, but our rates are typically the same.
So if somebody has bought a house more than 5.75, let's assume 6.25, this is the right time for them to refinance to 5.875.
Absolutely.
It's arm rate listeners. Why you keep waiting? If you bought it something higher, go refinance it right now. And I think this. Let's talk about the investment properties also. Even how are the investment property rates right now?
So they're only about a 0.5% higher than the owner occupied. So, in the case of the 5.5 arm, which is at 5.875,
Mhm.
that would be at 6.375%. So that's a very, very good interest rate for an investment property.
That's I think see a lot of listeners might have bought a finance investment properties last year for 6.75, 6.825. I think for them it's a great time, listeners. Like do check you keep regularly keep checking what is your rates, what rates you have bought in. Like is it a right time? Keep checking like so that way you're not going to keep paying. Maybe you might be paying, keep waiting like it will drop to 5%, 5%. Let me do a refinance. That's not the smartest way to do it. I think keep regularly every few months, 6 months, keeping your lender, try to understand what are the rates, or like that's where you can get the sense of how the market is going on. That's very, very important. Listeners, if you have any questions about the refinance, if you want to do a purchase, would like to know more about the qualifications, do give us a call. Our studio line numbers are 877 265 5992, 877 265 5992. So,
Can I elaborate a little bit on the refinance
yeah,
analysis?
please go ahead. Yeah.
I definitely, people get very number oriented, whether it's they're going to lock in a rate or they're going to refinance, whatever that is. Oh, I want 5%. I want 5.2%. They get fixated on a number. I think it's really important to take a look when you're doing especially a refinance, what is the difference in payment? And then we look at what is the cost of that refinance. And then we do the break even point. What's going to make sense? So, if the break even point is pretty short, that refinance is going to make sense for you.
I think that's one more important thing to consider. Okay, let's assume you bought you purchase a loan right now, right, for your property. Refinance, should I do with the same lender or should I go back to a different lender? I think there's a lot of a myth right now. For example, let's assume you bought it for 5.75. Some lender is giving you 5.25, but the same lender is giving you to 5.5 refinance rates. Will you go for 5.5 or you will go to 5.25 April? 5.5 with the same lender.
Uh-huh.
Okay. 5.25 is with a different lender.
Well,
Which
it's going to depend on the cost to me
not
because
only the cost.
the same cost.
No, not about the cost, right? Let's cost is the same. Let's keep the cost is also same.
Okay. So it will depend. It depends on, if the lender is doing a good job for you.
No, I think we are missing one point, right? Anytime you freshly do a new loan, your interest rate starts, you start paying the interest from the beginning again.
Yes.
But
Yes.
if you're refinancing with this, basically same lender can help you to lock into a lower rate.
Yes.
You are saving a lot of interest right there, listeners. Be smart. That is very important. Okay. That is where the show is all about. You can't just blindly go about, for example, that's a good thing about April, which I really like it. For $3,000, you help to refinance them, right? Basically, just
Yes.
3,000 is a cost for that, where you can lock in with a lower rate.
Correct.
You're not refinancing, basically, you're locking into lower rates.
Yes. So if the loan has already existed with some of the investors, they will do a modification down to the current rate later on
Mhm.
after so many on-time payments.
Yeah. Listeners, myself, Realtor Nagaraj Annaiah. If you have any questions, do give us a call. Our studio line numbers are 877-265-5992. 877-265-5992. One more important thing I think we were discussing before the show, right? How the generations have changed or the mentality of some peoples have changed where they're like basically they make a good money, right? They're still making 220K, 230K, but still they have a mindset of a renting and they have a mindset of borrowing of too much of money, right? For the credit cards and everything. But they don't think about investing and buying a house. I'm talking about, forget about H1B. Let's keep the H1B aside right now. I'm talking about the citizens or like the people around here sometimes which they're making mistakes, right?
Agreed. I see a lot of people when I go to pull up credit
Mhm.
that have a lot of expensive car loans, car leases, credit cards. They extend a lot of credit cards. And whatever that monthly payment, the minimum monthly payments on all of those, that takes away from what they can purchase for their home. And so it's really important, and when you're renting, you're just throwing money out the window. You're not getting any equity from that whatsoever. So it's really important to kind of strategize and keep pay off credit cards every month, not accumulate that debt. Look at the car leases or the auto loans in a smart way and not overextend yourself because then it's going to be very difficult to get into the home that you want. Get in the home first. Try to get the home first and then look at the other things, but you still have to be smart about it.
I think smart comes from the parents also. What I'm trying to tell you is like even the parents also how they bring up the kids and how they educating about the all the finances stuffs, math stuff, which is very important so that when they grow up they can start saving the finances better, looking at the way they're looking at the old picture. When they start making a money, that will change it over perspective. Because as a younger kid, you leave them, they don't know what are the expenses wise and everything. They start spending expenses more than what they need, and they never think about the wealth building.
That is correct. I always hear that, there's a certain percentage of America that is living paycheck to paycheck. But that number is not really true in the true sense of the word
Yeah.
Because what that means is people are overextending themselves in credit and they can't afford their bills. It doesn't mean that maybe they're not making a good amount of money and that they would have other money to spend somewhere. They're maybe overextended in their bills. And so, that makes me nervous when I see people overextending. It takes away from their power and their wealth that they could be building for themselves.
Yeah, and I think this all these things came up because we were looking about the people where they make 240, 250K, and they borrowed. I think they simply borrowed a credit card for no reasons. I think credit cards are the limits they need to be checking quickly, not to borrow more than 30% of their whatever is approved. That is the one is basically anytime you borrow more than 30%, that is where the more than 60 to 80 points will drop quickly.
Easily. It's probably, I would say more than that. It's about 35, I think, to 40% of your credit score is utilization of credit, which is the percentage of the line amount on credit cards that you're using. It's a huge amount.
It's a huge amount. Listeners, myself, Realtor Nagaraj Annaiah. If you have any questions and you would like to pitch in and give you some inputs on this or anything on the mortgage or a real estate, do give us a call. Our studio line numbers are 877-265-5992. 877-265-5992. Now let's talk quickly like on the how are the new lending rules impacting a first-time buyers? Like recent changes in lending regulations have relaxed affordability test, potentially allowing more first-time buyers to enter the market.
We haven't really seen anything being implemented at this time as far as that is concerned. I mean, with our lending guidelines, making sure that people can afford their payments, it has been monumental for many years. So I haven't seen any big changes at all.
I think only recent change what we noticed was the FHA loans for the immigrants, right? Like it's only applies for the citizen. That's what is the only change right now is happening in the law.
That is the one change that we've seen is that they must be either a permanent resident or a citizen because that is a federal backed program. And so they're extending that since just to citizens and permanent residents.
Okay. One more important thing to consider, right? A lot of people are expecting markets going to crash because home prices are projected to uh, decrease. There's a lot of speculations are happening, but you are in a different world. Means you do just not see the Bay Area. You see the all part of most of the other part of the California also. How are you seeing right now? The appraisals are coming more, or like how is it? Are you seeing right now? Are you seeing any differences coming in?
No, everything in many, I do in a lot of different areas and states. Most all of my appraisals have come in a state showing a stable market.
Mhm.
So there still aren't a lot of properties in the market, on the market compared to the demand. And so that's keeping it really stable. And then, of course, you have the Bay Area where you are,
Mhm.
which is a totally different market. And that alone, I mean, even rode through the past crash of 2008 really beautifully because it's in such high demand. So I don't expect any big crash. Markets, there might be some ebbs and flows of a little declining, but I don't expect any big crash, and there's nothing to show for that.
I think, see, there are various factors it might be happening, right? One of the known client is doing a remodeling. Okay. Anything you go and do a remodeling, the home prices are so, means anything materials, labor cost, everything is so high.
Yeah.
And all this contributes means, do you think the homes, that means it's leading to the inflation. In turn, is construction costs going up, inflation goes up, right? With your inflation, all the construction goes, where it will come back into it. Again, go back to the all your home prices.
Mhm.
Dude, if anything to crash happens means other side needs to start decreasing it. But what happened recently is like all the tariffs, everything. I think tariffs was reduced a little bit again, but it's still a 30%, 40% up compared to January right now. That
Mhm.
is where the slow cycle start hitting right now. Anytime you go to shopping in a Home Depot for anything your constructions, I can see it's easily it's a $500. Whatever it used to be a blink cameras for $20, $10, $15 in before January, right now is on $59.
Mhm.
You can see the difference right now. People are not realizing other set of the people. They're thinking, still it might drop, it might crash, it might happen something. But they're not realizing the other side of the world, what's happening, slowly changing. So all this slowly, I know that's the way the smart buyers will do. Whenever there's a small decline or a slow decline is there, that is where you need to jump in.
Mhm.
So that makes a difference altogether, listeners. Like if you have any questions, do give me a call, share your input, what you are noticing in our studio line numbers are 877-265-5992, 877-265-5992. But recently, April, one more thing, what I was noticing in, there was a potential like privatization of Fannie Mae and Freddie Mac, which might happen. They're discussing about privatizing these entities. What do you think for the future mortgage rates and lending practices would happen? Like, do you think any changes would happen for this?
It's a hard one to say. I mean, definitely having Fannie Mae and Freddie Mac in general keeps our mortgage rates low because there's a guaranteed secondary market.
Mhm.
Um, would privatization change that? I mean, I wouldn't think so because once again, it would still be a guaranteed secondary market for loans to be sold to. So it's kind of hard to know for sure, but I wouldn't think it would change it that much.
I think that we need to see. I think if that is going to happen, that's completely going to toss the market. I mean to say it might go on the other side or it might go on the another side. We need to see because the
Mm.
borrowing stuffs might change, but let's see how it goes in. But if somebody wants to buy a house right now, do you suggest for them to take a 30-year fixed or like suggest them to go with arm rates? What would be the better options?
I still think the ARM rates are great. They're going to offer a lower interest rate. That's good, especially for first-time home buyers, because there is a chance that they may not live in that house. Probably they're not going to live in the house for 30 years, but they may live in it 5, 7, 10 years. Also, if somebody's younger and going to be having more earning potential in the future, then that's a great place to start with the ARM because it's going to have a lower payment. So I'm still a big fan of the ARM loans, but people also have to be comfortable with them. I think most of your listeners are very comfortable. They're more savvy, monetarily savvy. But for
Mhm.
somebody that is on a fixed income that's somehow a little less savvy, money savvy, then maybe a 30-year fix is better because it helps them sleep at night.
And again, depends on what kind of age are you borrowing, right? Like, are you borrowing at your retirement age? Maybe 30 years might be a better for them because they're considering no more income for them.
Agreed.
And if they're younger age, come on, then arms are better for them. It's a quick, you can refinance it. I think because right now since so many borrowing happened at the 6%, 6.5%, I think last year and all 6%, 5.875. If the rate doesn't change at all for next 7 years, we're talking about after Mr. Trump and even the new government, that is where we can start seeing some differences happening in around.
Yeah. The rates in the market, as both the real estate and interest rates, which kind of, cyclically go together, they cycle every 7 to 10 years. So, you'll see it go up, you'll see it go down, and it does give you opportunities to take advantage of that refinance at different times.
Okay. And I think very important to talk about is the credit score. You were able to help one of the client even for a 635. I think I see very rarely nowadays 635 credit score.
Yeah.
So what's the minimum credit score you can help anyone? Which is like very important to talk about it, which we don't emphasize more because that's the beauty of working with you. One is the credit score. Somebody has moved to from India to here recently in less than a 1 year income. Also, you're able to help them out.
Yes.
So, what's
Yeah.
the lowest rate you can help anyone, April?
Well, it depends on the loan type. 620 would be a typical credit score. We do have certain ones which would have loan the highest loan amounts might not fit in the Bay Area, but we can even do down to 580 on certain ones.
580.
Yeah, but once
I,
again, that would have to be within the guidelines of certain loan limits. So
okay. 580 is the minimum. You still can able to help them out, but are they going to be hit with a higher credit interest rates?
yes, they're going to have a higher interest rate. Those ones would be backed by government backing, so that would be once again you have to be a citizen and that would be an FHA loan.
Okay.
Those aren't always going to work in your market. So the listeners are probably, not going to be able to come in with a 580 credit score, but 620 and above is kind of the standard.
Uh-huh.
But for jumbo, loan amounts in the Bay Area, really 680 or above is really where you need to be most of the time. So credit score is very important.
Again, depends on you're going with a conventional or a jumbo, right? Like that is where
Correct.
it changes in listeners. Like if conventional jumbo, don't get confused. It's like just a loan amount what we are talking about. If it is, I think it's just like how much you're borrowing in. But minimum is what they need is 620 is the minimum. If you're borrowing under 1 million, let's put it under 1 million. If anything more than 1 million, we can put it as 620. No, not 620, 680 is the minimum.
Yeah.
And one more important thing is like we need to talk about is quickly we need to talk about is the lower down payment. What's the minimum lower down payment is needed if there are citizens? I think H1Bs they need a 10% and higher. What about if there are citizens here?
So we have programs that have 3.5% down. Once again, that's going to have loan limitations.
Mhm.
5% down would be the next category of those, which can also be those on visas and such, but those also are going to have loan limitations, which give me a second while I look at my little thing. Like today in most of our um, it's gone up, so it can be up to 1.2, a little over, almost 1.2, a little bit over of that million.
Yeah, these numbers are only for educational listeners. Like it's like we need to, based on your scenarios, we need to run. This is only for education part we are running in. Okay. Don't just quote on that. Like these are the numbers we just gave based on the ideal cases, but all the exact numbers we need to run your credit and we need to know your how much you make and everything. Based on that, April can surely help you out. She has helped a lot of clients around, especially my clients have benefited with a better practices on the rates and all the services what she provides. And if you have any questions, like do reach out to her. Where she can guide you. April, if somebody wants to reach out, what's the best way to contact you?
Best way is on my cell phone, 949-306-8100.
Okay, listeners, if you want to reach out to me, go to nagarajhomes.com, click on a WhatsApp icon, and that's the easiest way to connect. Go to nagarajhomes.com, click on a WhatsApp icon, easiest way to connect. I have a couple of, I would like to talk about a couple of open houses or a couple of new listings coming up. One in Evergreen. It's a wonderful listing coming up for a 1.65 to 1.73 bed, two bath, close to 1,700 square footage. A lot of people are thinking market slows down, but I think it depends on the market slows down, depend on the cities where we are or like zip codes, right? Like might go slow down a little bit, but it recovers back so much again. So there's a new listing which is coming up, and new listing coming up in Ardenwood area. This is also close to be around 1.7 to 75. If you'd like to know more about these listings, do reach out to me. And anything you're buying or selling and want to build on your wealth, reach out to me. It's an easy free consultation. It's even April. It's for you. It's also free consultation, right? You're not going to just call her, explain your scenario. She can be able to help you out. And thank you so much. Have a wonderful evening. Thank you so much, listeners. Thank you.